Hello, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is October 18, 2022. This is going to be a quick look at the some of the major currency pairs in the Forex market. I'm going to start off by taking a look at the Euro versus US dollar. Looking at this pair yesterday, late yesterday, I talked about the market moving sharply to the upside, but the pips would get harder to the upside. We already moved pretty strongly and moved above the 50% retracement level and was approaching the 200 bar moving average on the 4-hour chart. That's the green line in this chart. And also the 61.8% retracement of the move down from the this high right here in early October to the high in the low in mid-October. Those levels all came in near the 98.58 level, and the price did move above each of those levels, but came into this swing area where we also had resistance up to the around the 98.80 level, and the you can see all the levels through here where the market had found some sellers or buyers. And indeed, the market peaked up here and then rotated back to the downside, reestablishing the 200 bar moving average and the 61.8% retracement as resistance, moving down to a lower swing area where we have a number of different swing lows and swing highs through here, as you can see, mostly through here. And then we reestablished that area as resistance through here, including here, and then moved above it in trading yesterday before rotating back down to it. 50% retracement was also in that area at 98.145. That's always a barometer between, like a seesaw. It's either on one side or the other. So found support there. So now we're ping-ponging between the 200 bar moving average above and the 61.8 and the 50% retracement on the downside. The buyers trying to keep control here, but they do need to get above the 200 bar moving average and above the swing area to open the door for further upside here for the Euro versus US dollar. Some risk on sentiment is helping the pair move to the upside as the U.S. stocks continue their surge to the upside. Let's take a look at the dollar versus yen. We did see a move to yet another new high going back to 1990. So I call it 32 years. We did see some jawboning from Bank of Japan officials. It seemed to have pushed the price down through here, went back into this channel here briefly, but then rebounded back to the upside and moving back toward our 149.27 high. All-time high for 32 years here. What can you say about it? Let's go to the 5-minute chart. We take a look at the 5-minute chart. You see the sharp move to the downside. It's sharp move back to the upside. We are trading right around the 100 and 200 bar moving average. Perhaps this scare to the downside or this move to the downside, 120 or so pips to the downside, will have traders thinking both ways for this currency pair around the 100 and 200 bar moving average. I don't know. It gets risky when you have 120 pip move or so to the downside in a matter of minutes. So that's your decision if you want to take on that risk. But be aware and be prepared. Make sure that you understand where your risk levels are. In the sterling versus US dollar, that currency pair moved sharply to the upside yesterday. And in the process, we moved up into a swing area through here. If I go back in time and take a look at all these levels here, just watch this yellow area right here. Swing low, swing low, swing low, swing low, swing low, swing high, swing high, swing high. So you can see the importance of this yellow area through that period. We did move above it in trading on October 4th and I guess October 5th. And the market could not sustain. We had a double top up there, and the market rotated to the downside, rotated further to the downside through here, and then back up to the area in trading yesterday and again today before moving to the downside here. Concern, there's just so much uncertainty in the UK debt market. They trashed all of Truss's initial plans, and then now the idea, the Bank of England, would they go ahead with the QT? Is that even right? I don't know. But it has investors moving in and out of the UK and out of the pound versus US dollar, and that helped push the price back down toward the rising 100-hour moving average, which is going to continue to be our key barometer on the downside. If the price moves below that level, everything turns a little bit more bearish, with the 200-hour moving average is the next level to get to and through to increase the bearish bias. Until then, this bottom here is probably a good thing for the buyers. We came down hard, tested it, got within 20 pips of it, and rotated back to the upside. We have this swing area through here to get above, and then we have this old swing area, which I already talked about here, all those lows and highs through there to get to and through. If the price is going to go higher, we need to get above those levels and stay above those levels. The dollar versus Canada went up to test the 200 and 100 hour moving average, speaking of which, and the market found sellers against that level and pushing back to the downside, currently trading just above the 137 level, which was near swing lows through here, broke below it in trading here today, on its way to this swing area here again. Lots of swing lows and highs through that level. That defines the area. And if we move below the 137 level and then go down below this area right here, it would increase the bearish bias to the downside. The Aussie versus US dollar. If we take a look at this currency pair, we're back above the 200-hour moving average. We tried to move above it earlier today and then came back down. Tested what? The 100-hour moving average. That's the blue line in this chart, and found support buyers against it. Moved above it yesterday. So this is increasingly getting important as a risk-defining level on the downside and bias-defining level. As long as the price can remain above that, that's more bullish. Better yet, if the price can stay above the 200-hour moving average and the 38.2% retracement of this last trend move to the downside, that would be more bullish for this currency pair as well. So this is really the close risk, I like to say, for the Aussie versus US dollar. Stay above is more bullish. On the top side, we obviously have these two highs here that came in and stalled the pair's rise right here and right here and right here, getting above the 63.45 level, and the 50% retracement in this swing area right here would be needed. Those are the targets on our roadmap to the upside here for the Aussie versus US dollar. Get above all those levels, and the bias continues its move to the upside here right now. I'm giving the short-term bias to the buys as long as the price can remain above the 200-hour moving average. So that's the Aussie versus US dollar, and finally the New Zealand versus US dollar, also making a move to the upside in trading here over the last few days. It moved above its 200-hour moving average yesterday and did find support buyers against the 200-hour moving average late in the day, and in the early Asian session we saw the price move to the upside, getting again bids from things like the U.S. stock market, which is down. Industrial average is currently up 646 points. The NASDAQ index is up 280 points in pre-market trading. Those are back-to-back big days for those indices, and helping the risk-on sentiment for the currency pairs like currencies like the New Zealand, the Aussie, the Canadian dollar, and even the currencies like the euro, which has been beaten down and is moving more to the upside. So there you have it, a look at a lot of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading today. Bye-bye now.